Good morning to all traders and welcome to our daily market insights video provided to you by Orbex. Of course, today is Thursday, the 30th of May, and my name is Stavros. We're here at head offices in Limassol once again. Now, risk of sentiment increases as the situation between US and China shows no signs of ending anytime soon. China is now thinking of restricting rare earth exports to the US. A very big push in the wound for US manufacturers. And that influences, of course, oil and gold. Institutions seem to be closing out some longs on oil amid the global growth concerns that are triggered by the trade war fears, of course. And gold, although expected to rise on risk conversion, seems to be taking a breather despite the equities sell-off, as investors also seem to be running to the US dollar instead. Let's have a look how we can expect those two to pan out. But before we do so, for the day, we have had a busy day already in Japan, Australia, and New Zealand as well. Now we're expecting some data from Spain, Brazilian GDP. The US GDP is the highlight for the day. And then we're looking at initial job claims just like a week before the NFP next Friday. Pending home sales, as well as the EAU crude oil stocks change for the week ending 24th of May. Then, of course, we have Clarida and also Wilkins' speech later in the night. Now, let's start with our gold, favorite gold, the 4-hour chart. Okay, so we'll have a, most likely we're going to have a double zigzag here. Okay, now this corrective move looks like a very nice ending triangle for me. Okay, and we have A, B, C, D, E. The E is not here yet. We're going to see it most likely shortly. So the first zigzag is over here, 5 waves to the upside, ABC, to the downside, sorry, ABC, and then we have, again, this is the double wave connection between the two zigzags. Then we have, again, the impulse to the downside, ABC, and another impulse to the downside. We can expect prices to go 1253, 1231, or even lower. Okay, now what I see here, and I like it because it validates bears. It adds more, I wouldn't say momentum, but it adds an extra validation on the downside. We have a bearish signal on the RSI under this period, so which is a period of a few days, and a hidden bullish divergence in a shorter time frame. This is a very good signal when they come one after the other. It's a very good signal that this is going to be, in the end, supported by the shorter term move. Okay. Now, if we go a little bit lower down, we are looking here at 4 signals that are going, are showing us that prices are moving to the downside. Now, we have a zigzag potentially here as well. Okay, so what will happen after this correction, we're going to see another 5 waves to the downside, right? Now, is this going to end here where this trend line lies at the, is the bottom trend line of this ending triangle, or around 1250, or is it going to go lower? Where normally we do get a break outside the trend line. This is called the spring, if you follow Wyckoff's theory. So it is very possible that we are going to go below that trend line. We can reach 1243 or even go lower than 1236. Okay, and normally that is because we have a duplication of or at least the 1.61 extension of wave A of this first zigzag. Okay, now the 100% is 1253, so we're looking to going at least there. Anything below that is obviously very possible, and would validate also the correction as a zigzag. Now, let's go on the oil quickly. Oil was right spot on last week, according to our let's say, recommendations. Prices moved down to the 58 and actually went even lower. Here we are looking, we have this zigzag, okay, and from here we're looking at an irregular, okay, so you can see the connection between the two. We have an ABC, a second ABC, and of course this is the zigzag, and this is the irregular ABC. Okay, the irregular is because B is extending higher than this level. Okay, so we are zigzag here, okay, and irregular over here. And now this is, of course, wave C. If we get the anti-retracement, let's call it, I like to do a negative -601 on the Fibonacci retracement to get the extension levels sometime, instead of using this extension, which is of the first wave. They seem to be going anywhere between 57 and 55 anyway. That would be the extension, golden extension, or even lower to 53. This is the 161 extension as well. Okay, so we're looking 53, 54, or 55 to actually hold prices. Normally after this correction, we are looking at another impulse to the downside. So that has finished. If we're looking at the duplication of that, of course, we would be most likely seeing prices moving back to like 60 or so, and then have another impulse to the downside. Okay. So let's go lower now. I don't think there's anything else to say on the 4 hour. On the 1 hour, what can we see? Within this last corrective impulse, right, or this last corrective move seems to be an expanding flat. Okay, so we are looking at an ABC and again ABC. Normally when that happens, our next move is an impulse to the upside. Okay, and that would be for the within the ABC correction, which is over here. Okay, ABC. So we'll have an impulse, and we could be expecting prices actually to go up a little bit, assuming we break above this level, of course, right? Because that could simply be a truncation, and prices could just, you know, turn lower before we reach 60.30 or 61.15. Okay, but the 60.30 is very possible. We are now sitting around 59.17. It would be a false break above the 60 psychological as well. So I wouldn't be surprised if that was the case. Now, we get signals, bullish signals, both on the RSI and the MACD, that can push indeed prices around this area, where I would expect bears to step in and push prices lower in the medium term. This is all there is today for our favorite gold and also oil. Don't forget we have the EIA report and of course some data from the US, with GDP being the highlight. Thank you for joining me for another day. If you like the video, of course, hit the like button, share with a friend. I would recommend, as always, that you visit our blog. It's where we cover the latest news, publish trading ideas, and provide all the necessary tools a trader needs, serving you responsibly.